Good to have you with us here on this Wednesday morning. Thanks for joining us. I'm Marlon Bowling with you, your tour guide to the ag commodities. This morning, I want to welcome aboard Mr. Brian Hoops, the president of Midwest Market Solutions. Now, he is based in Springfield, Illinois, and he joins us right now. And we'll take a look at our overnight market action. Brian, I did not see anything on the wire this morning when it came to overnight export sales. Is it true we're quiet again there?
Yeah, good morning, Marlon. Third day in a row, every day this week, we've kind of been shut out of the export market. You know, we had kind of a surge the last couple of weeks when it was dry in parts of southern Brazil and Argentina. And I think there was some end users getting some forward coverage, especially some foreign countries. And now they did have a little bit of rain. The pattern has kind of stabilized a little bit. Now the forecast is starting to turn drier again. That may lead to some additional export business. But just this last several days, no sales to talk about. So, what the market's kind of looking for today is the weekly EIA report expected to be pretty friendly for the corn market. We'll have NOPA Crush report that comes out at 11 o'clock. We've seen heavy spread trade of traders buying meal ahead of this report, selling bean oil as stocks are expected to increase. And that is expected to continue to be a feature at least up until the report's released, because it's expected to be a very friendly report. And then tomorrow will be export sales, and they should be pretty robust for corn and for soybeans because of the buying that we've seen over the last 2 weeks. Now, next week's sales should be much quieter because we just have not seen much in the way of export business so far this week.
We had some retail sales data that came out this morning. Does that mean anything to the ag trade?
Yeah, unfortunately, probably not. We kind of look at what the PPI, CPI numbers do, but some of this trade that came out this morning, it's real minimal impact on the ag commodities. We are looking at inflation certainly as a major component of pricing the grain markets this year. Consumers, especially producers of agriculture, looking at what's it going to cost to put this crop in, especially for corn, where it's more expensive to put the crop in. Increased fertilizer costs, availability of fertilizers and chemicals are another issue, not only the cost. So certainly any inflationary reports that come out, market's going to pay attention to that.
Well, let's look at the corn price then as we wrapped up our Globex trade overnight. And on the big board, these quotes provided by bar chart, I will point out one thing. Our viewers at home may notice the top line is now March. It doesn't say December anymore. So the March moves up as December disappeared yesterday, and now the March is 2 1/4 higher at 592.5. Real quickly, did that mean anything to the trade with the December expiring yesterday?
Yeah, just had very little fanfare. Went off the board very quietly. The market's already shifted all the volume, all the open interest over to March. It's already, all the pricing is being done off of the March. So very, very minimal impact, if anything, as far as the December contracts expiring yesterday.
Let's look at soybeans. And in the overnight trade here, you had January 3 cents higher at 12.62.5 per bushel. And you had the March 2 1/4 higher. So again, it started out a little on the weak side, but it did firm up a little bit. I want to take a look at these soy products that you were talking about here, Brian. And soybean meal overnight, up 270 on the March contract, 376.50. Which one do you mainly focus on right now, January or March?
But while you have your board up there on the screen, you notice how this market is a premium market. January holding a big premium over March, and then there's a small premium over the May contract. This is a bullish sign, and we've been talking about this for some time on your program here, that this is very bullish, the fact that it's an inverted market. It tells you that someone wants that January soybean meal, and they don't want to wait until, into the spring or into the summer months. They want that product now. We've seen this before with soybeans last year. We led to a really strong bull market. Corn is getting very close to showing this type of inverted market structure, but Minneapolis wheat is the same way, and that's been a market that's had very strong late summer and fall because of the supply concerns.
Now, if you look at the soybean oil trade, I'll check that out too in comparison with the meal, and on the oil, lower again overnight. So you had the January down 67 points. And you had the March down 64 points overnight. Okay, on to the wheat that you were talking about. And in Chicago, we had that March contract overnight going down by 9 3/4 cents at 777 1/4. So a lot of pressure there on that March contract. Let's look at Kansas City wheat in the overnight trade. You had the March contract there dropping 9 1/4 at 802.5, and in the spring wheat market, here you had the March down a nickel at 10.16, about 2 cents from its low of the overnight trade, 4 cents from its high. We'll be back and talk with Brian Hoops about our livestock trade yesterday. Had a little bit of activity in the cash market yesterday. We'll see what it was and what it meant when we come back. Well, we're back with Brian Hoops of Midwest Market Solutions. Brian, I saw on the livestock summary yesterday, we had a little bit of cash cattle market activity. I'm going to call it lower. It looks like about the only thing I heard about was around the 138 level, $138 per hundredweight out there. Not a very heavy movement, though, from what I understand. And on a dress basis, well, we had a few hundred head that were bringing between 216 and 220 per hundredweight out there. Just wondered if you had heard much different information.
Yeah, we're hearing the same thing in that 138 area. It's going to be steady to weaker compared to last week. And so, we did see a pullback in the futures market after this kind of started making the rounds. It was a disappointment to the trade. We rallied sharply on Monday because of those smaller show lists, and that should have indicated stronger cash trade. But boxes continue to weaken, and packers have holiday short and kill weeks coming up. So they may not be interested in really paying a lot more money in the next several weeks for cattle until at least we get through some of this holiday season. Then they may start to buy back more aggressively. But right now, if we can be steady this week, that's probably going to be considered a minor victory if in fact that does happen, considering what the boxes are doing.
When you have Christmas on a weekend this year, and that means New Year is also on a weekend this year, does that mean much of a change in the processing schedule at the packing plants?
Yeah, they'll give their workers some time off around the Christmas holidays, so they will cut chain speeds both of these weeks. So it's going to be a shortened week. Now they won't have a kill on Saturday because it's Christmas, and we'll get some time off on Friday and Sunday. So definitely be, and that just limits some of the buying interest these packers have.
Let's review where we finished yesterday on the live cattle board here. And yesterday we wrapped up with the February down 55 cents at 138.30. On the feeder cattle market yesterday, we had January down 95 at 164.57. However, March was only down 7 cents at the close. Lean hog trade had February down 67 at 80.07 yesterday. April down 75 cents. We'll see how they want to open up here in just a little bit. Thanks, Brian, for the help this morning. Good to talk to you again. Brian Hoops of Midwest Market Solutions. Janet, that's how things are shaping up. We'll get everything open at the bottom of the hour.